Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe, a crack of dawn edition for Thursday the 4th of April. Starting off with the FTSE 100, where there seems to be an uptrend line there from January. That's running through the lows of this week to date, so around 85.50. Still need to break the 50-day line and that resistance line there from last month to 86.70 on an end-of-day close basis. You can see there's also a resistance line there in the RSI window. If we do break down, then it's back down to 84.80. Otherwise, hopefully, if we can get through that 50-day line, this time we head up towards 87.50 and keep going to the top of that rising trend channel from the end of 2023. Moving along to the situation at the DAX, obviously the EU countries hit harder than the UK out of probably sympathy for the UK's rather precarious state at the moment. Here we've got a rebound off the rising trend channel there from November. That is and was at 22,100. Above that, we're looking for this market to fill the gap there to 22,800. Maybe it would do that on the basis of relief that the tariff numbers are finally out and it's out of the way. Negative at the moment is the failure at RSI 50 that we've had, so that does still warn us that we could head it down to the first floor of the first gap there from back in February, 21,600. Moving on to the Dow, and it'll be interesting to see how this copes with all the tariff excitement. Here we've found the floor of that rising trend channel from May last year. That's at 41,500. Above that, we're looking for this market to head up to the 50-day line, 43,300. I don't think there's any point trying to get any more cleverer than that. If you're cautious, you wait for the RSI to push back above neutral 50. Versus 47 at the moment, we haven't been above the neutral 50 level since we broke down through 44,000 at or towards the end of February. Moving along to Bitcoin, which I suppose in some ways is a reflection of the sentiment at the moment. Here we've got this market hugging the floor of that rising trend channel now at 83,000. That's been in place since basically March last year. We're in a range between the floor of that channel and recent resistance and the 50-day line towards 90,000. It's probably wise not to try and get any more precise than that about where this market could potentially be going. But I suppose the positive for the bulls is we're still holding that September uptrend line. Onto gold, and here the situation is that remains an up and away type of situation. Best case scenario target here is we hit 3,400 by the end of next month. We were already looking for 3,200 by the end of this month, so hopefully we'll be ahead of schedule on that. And the initial March resistance there around 3060, while we're above that looking for 3,400, which obviously would be amazing for this market. Moving on to the stocks, and starting off with African Pioneer. Here it looks as though there's a bit of jiggery-pokery either side of the 50-day line, but we may finally be on our way for a little bit of recovery. Gap close there at 1.14, but end-of-day close above that, and we could be looking at not only 1.4 pence, but as high as 1.6 pence. Later this month, ideally, we stay above the 50-day moving average, just near a penny at the moment. On to Celadon, where it's a bit of a binary bet as to where the company gets its money or doesn't get its money. Amazing rebound yesterday, so I suppose somebody's thinking that the company will get its money or stay alive. Obviously, it is, it's already said that it's delisting, so we have to wave goodbye to another rather exciting stock on the market. But at least here, while we're above that recent low, or the latest low there, around 2 3/4 pence, looking for the 50-day line as a maximum here. The other potential would be the top of the latest gap there at 14 pence, but very solid candle yesterday, opening at the low, closing the high, implying that somebody believes good news is on its way. On to Catenai, and here I covered it in yesterday's RNS hot list as the stock of the day. After that, it was up 6%, which I suppose is not much, but it's a start. And the idea here was that the shares would bounce at the floor of that rising trend channel around 0.15 and head at least up to the 200-day line at near 0.2. Best case is what we've been looking for the last couple of months, which is up to 0.31 and the top of that broadening or that rising trend channel there from back in August. But third or fourth time lucky in terms of bouncing in the mid-teens there for Catenai. On to EnergyPathways, where the crowd is saying that one can't say anything negative about the company. What one can say is it was a bit disappointing that we didn't manage to clear the 8p area at the fourth time of asking. We're now back near the 50-day moving average and the broken resistance line there, the red one there from the end of October. Key here is holding above 6.5p so that we can have maybe fifth time lucky on breaking through 8p. If we do that, then the best case here is 13p. Worst case is that below 8p we have to test the 200-day line again at 5.25p before heading higher. But it is positive at the moment that we're still above the RSI 50 level, even after the latest pullback. But just a slight feeling here that towards 8p, somebody just says, sell the stock. Moving on to something perhaps less contentious, which is European metals. Here you can see actually a similar pattern, in fact, with the spike to 22p and then coming back towards our initial target here at 11.5p. Above that, we're looking for obviously a retest of that 22 to 24p area by the end of this month. GreenRoc is next, and here the situation, I suppose, is enlivened by hopes that Trump might take over Greenland and everything in it. Clearly, his interest in the territory gives a better look to all the people involved there. We've got a broadening triangle base here for GreenRoc, and bounced off that. End of day close, or another end of day close through the 200-day line. We could be heading up to the top of the triangle, 2.5p by the end of this month. Ideally, we stay above the 50-day line, 1.4p, whatever happens there. Just wanted to look at stock, which seems to be going down and keeping on going down, which isn't very nice. You can see the last time we looked at it was last year. Hydrogen Utopia here, sort of slow slide for the shares, despite the prospects for Ochrid. And here, what one can say is that 50-day line has been the barrier on potentially recovering here. So we've got a falling trend channel that's been in place since December, and at the very least at this stage looks like there's a risk of testing the floor of that channel there at 1.8p. But we are apparently in a range between 1.8 and 2.7p. The other point to note at the moment is that the shares are very oversold, RSI 13, so that might help the stock, although as you can see previously in December, at the moment it looks as though even being oversold is not helping the situation. Moving on to Kistos, and here better look in the sense that we've hit first target here around the £1.58 level. End of day close above £1.58, £1.59 to be precise, yesterday's high. And we're looking for a fresh leg to the upside, £2.06 by the end of next month. So looking rather more chirpy there at Kistos. Next up is a stock where we're all on the edge of our seats waiting for the next piece of news, which should be pivotal in terms of funding. Here you can see that the shares currently dancing with the 50-day moving average at 4p. Want to see it break, or see the shares break that in order to get up to the top of that broadening triangle there from back in January as high as 6p as a near-term target for the end of this month. I suppose the more logical look for this chart now is that we are in a broadening or in a rising trend channel and rising trend channel base, and that would be based at the line I'm about to draw here at the 3p level. So we're in a range between basically 3 and 6.5p. Moving on to Rome Resources, another stock which is slightly unloved at the moment due to DRC activities. I think it's slightly unfair that the shares have fallen so much, but obviously you can't argue with the market. Current situation is that we are oversold, and trying to find a logical place for the shares to bounce. There is a support line projection there from back in July, so ideally 0.14 and the recent lows are the ultimate low for the shares, and we could head back towards the low 20s, which was the September support for the shares. But obviously at the moment that seems to be the best case scenario on offer. You've got that resistance line there, 0.22 as a target. On to the last two. The first one is one that I had lined up to look at yesterday, but in the end managed to omit. I did tweet out about this, though, for Sealand, that the key here is the 200-day line at 1.34. Now, need an end-of-day close above that to give us a new leg higher to last month's resistance through 1.8 pence. Ideally now we have the shares staying above a penny, which was resistance on the way down. Maybe that's the key for those crazy enough to be in that situation. Finishing off with Zenith, and here, although we moved along in terms of the rising channel that we've got here, we have had an end-of-day close, strong end-of-day close above a rising 50-day moving average. I suppose the resistance here in the chart, which is a little bit like EnergyPathways, is that we need to break a line of resistance here at 8.8 pence. If we can do that on an end-of-day close basis, then we are looking for the top of the channel, which is now basically heading towards the 17 or 18 pence level, hopefully by the end of this month. But nicely primed there. Break of 8.8 could lead to 16 pence plus, and ideally we stay above 6 3/4, so not a bad risk-reward setup. That's it for me today. More updates at a more usual time tomorrow.